Hi everyone, Daniel here from One Mortgages and Protection, your mortgage and protection insurance brokers. I hope you're liking the new video. I hope you're liking the content. If you do, please be sure to like, share and subscribe for all future videos and information on all things mortgages and protection related. Please take a look at our website by searching for One Mortgages and Protection or check us out on all social channels. Thanks very much and enjoy.
Hello, and joining us on the Mortgage and Protection podcast this time is Daniel Condren from One Mortgages to talk all about conversion mortgages. Daniel, welcome back. How are you?
I'm all right, thanks, Tessa. Yeah, really good, thank you. Good to be back.
Good. I'm glad. That's good to hear. So let's get straight into it then. I've got some frequently Googled questions here that people are asking on conversion mortgages. So to begin with, are there mortgages tailored to conversions and how does it all work?
There definitely are. So it is not necessarily known as a mortgage, but more on conversion finance or people who want to convert derelict pubs, agricultural buildings, barns, conversions, things like that. So it's definitely a great market. And if a customer is wanting to maximize their investment or, build their wealth, conversion is a great place to be.
Okay, brilliant. And you've kind of answered the next question already, but when would you need a conversion mortgage then? You mentioned a few examples there. Are there any others?
Yeah, well, to convert properties that into particularly residence mortgages, you'd be looking at barns, farmhouses, derelict places, things like churches. Pubs are really good right now. The high street is obviously dying. So there's a lot of buildings that are just not being used. So in relation to planning consent or getting them converted back to residential from a commercial property, it's really good. So converting current properties to maximize an investor. So really it's when you typically a buy-to-let customer or somebody who's got investment properties, then they want to go a little bit further in making their money grow. They're looking at converting properties. So renovating them, refurbishing them, that's typically the type of customer that looks for these types of finance arrangements.
It's kind of giving me Grand Designs vibes here. Are there obviously other programs out there, but it's really giving me those sort of when you see all these big buildings and barns being converted and things like that.
Yeah, it's good for the market. It's good for local things. Nobody wants to have an empty building that's not doing anything. So if a customer's out there that's got an opportunity to know a developer or somebody that's got commercial property that's empty, then it's always good to ask that question and whether you can reinvent it or bring it back to life and change it back to somebody to live in there as a home. It's always a good option.
Yeah, no, definitely. And again, I think you've touched on this already. Who is a conversion mortgage for, or what kind of customer would look for a conversion mortgage?
It would be property investors, property developers, people who have already maybe got a few properties in the background, obviously got a little bit of cash, got some money that wants to be a little bit more adventurous. With more risk comes more reward. So if you've got the money and you are in property already, then converting property is a great way to build on it even more. So it's typically investors or people that are developing property.
Okay, brilliant. And are conversion mortgages hard to get then? I mean, I suppose what is involved compared to your standard sort of mortgage?
It's all about the customer's appetite. So if you were not in that area at all and you've never looked at investing in property, or you don't have buy-to-lets or a property already, you wouldn't get a first-time buyer coming, oh yeah, I want to convert a property from a pub to an apartment or a building. So you certainly have to have experience. But how hard is it? It's not that hard. They look at the customer at the heart of it. So they want to check that, of course, they've got a good track record. They certainly have the means to do the development. So when you're converting a property, it obviously is quite costly. You can't just have your deposit to acquire the property. You also need to have a little bit of money to pay for the change in the property. So that might be ripping it out, converting it, renovating it, cleaning it out, and obviously changing the use. So you do need a little bit of money to go with it. That being said, if you're buying a property at a lower price, whenever you convert a property, the value of that house or that property goes up. So typically there's equity in that as well. So they're not difficult. You've just got to find the right type of property and speak to somebody like me to understand the numbers. So you've got to understand whether it's a good deal. So any type of broker would be able to tell you whether the numbers work, whether it's a good investment for that. So yeah, they're not that difficult, but speak to an expert.
Some good points that you raised there. I mean, I suppose it's really down to the individual, isn't it? Okay, then. So, how much can I borrow then when it comes to a conversion mortgage? How much can I borrow?
So typically, it would come back into the numbers of what the gross development value of the property is. So if you're buying a barn and it's derelict and it's empty, you wouldn't really think that would be at the top level of that asset. And typically, when you convert something or renovate it or spruce it up, the value of the asset increases. So it's all based on what the new value of that property is. So typically speaking, you would want a considerable deposit of the barn. So let's say you were buying a barn or a pub and it may cost you 250,000, 250,000. You probably would want about 30% deposit.
Right.
So you need about 30% of funds to be able to look at that. And then you would question how much money have you got in the background to be able to do the work involved. So you'd need to be speaking to other people like an architect, a surveyor. Structurally, you need to look at the property. So there are other partners that we work with. So of course, speaking to someone like me would put you in the right direction.
So quite a few things to think about, but quite exciting as well, isn't it? Especially when you think of converting a barn. You mentioned deposit there. What deposit will I need? So we've covered that there. How long then do conversion mortgages last?
Typically, the mortgage element it would be a finance arrangement, and when you do a project like this, it's normally a minimum of 12 months. I mean, you can do it very, very quickly, but even then, you wouldn't do that. So maybe 24 months or a longer term arrangement, but they are very short. And then the mortgage comes in once you've changed that. So once you've renovated it and converted it, if you wanted to keep that property within your portfolio or within like that, then we would look at other types of commercial mortgages or a buy-to-let mortgage if you've converted it to residential or whatever else in it. So when we say mortgage, I suppose it's just an finance arranged on a property, but they are typically very short term. So it's all short term arrangements, anything from 6 months through to 2 years.
Right. Okay. Brilliant. That just gives us an idea. And then again, you've probably covered this already with what you've been saying on conversion mortgages. But what are the pros and cons of these?
The pros definitely the added value that you can do with your original investment. So whatever money you've got to start with, typically there is always an uplift. So you're always going to enhance the value of something that's going to earn you back. So the pros are that you're going to gain your own investment. You're going to get your investment back, and it's going to be good. The cons, the bad parts of it is that it could be risky. If you don't do your due diligence, you don't find the right property in the right area, you haven't got the right partners in place, and we call these strategic partners. So in my area, the finance element of making sure that the deal is the cheapest deal that we can find, and we source the right type of finance, but also you source the right architect that's working in the right way for you. And the costs are, are involved, and you understand what that is. Then you understand all the survey costs and how many surveys you potentially might need. And then the costs of the builder. So typically when it comes to a conversion or a renovation of this type, there's a lot of building work involved. And that is the biggest area that people lose on, because they haven't either had an accurate quotation or they haven't had an accurate cost of works of what's involved. So that always catches people out. So having a trusted builder that is very clear, and that market right now is crazy with the cost of materials and everything changing and everything like that. So of course, get 3 quotes, understand your brief when you tell the builder what you want them to do, that it's very accurate, that you understand what the costs are, because you don't want to be caught out of buying a property thinking the cost of works is X and then it's changed and then you're short, or it's eating into your investment. So yeah, I hope that helps.
Definitely a really good point. And I mean, if somebody's sitting there thinking that they want to convert a barn, they've seen a barn, for example, how can a broker like yourself kind of help them out? Why would they need to go to you and not just do it themselves? You've already kind of said that you've got other people that you can go to for the help.
It's just the speed. These types of deals are very, very hard to come by because there's so many people that are looking for below market value properties or conversion or anything like that. So if a customer or an investor actually comes across something like that, you've got to act as quickly as possible. So speed is absolutely everything of this, and understanding the numbers. So from your broker, you should get them to understand how much is it all going to cost, and have a breakdown of everything, and not just the finance arrangement, because the broker should ask you how much is the cost of works going to be, how much are all the other associated fees, and you've got to allocate for all that as well to understand whether the deal works. Are you going to make money? And that's the key area, that in this type of arrangement, the customer has to know that they're going to make money. Otherwise, it's not viable. Why would you invest in doing that if it's not viable and you're not going to make money? Of course, if you're buying the barn for your own home and you want to live there and it's yours, then it's a purchase with your heart, not your head. So I always say that. So make sure that the investor or the client or you, the customer, is thinking with their head and their bank balance rather than their heart, because it could go terribly wrong and you don't want to lose all that money.
Oh, good way of looking at it. Yeah, really good way. It's definitely food for thought there, isn't it? Well, that's been really, really insightful. I mean, have you got anything else to add on conversion mortgages, Daniel, or do you think that we've kind of covered it all there?
No, I'm happy. I think we've covered everything. But if there is anybody out there that does want to understand a little bit more about development finance, conversion, you do find a building that you wanted to convert or investing or look into, then give us a call.
There we go. Well, thank you so much for your time. And I'm sure we'll catch you on another episode soon.
Thank you very much.
Take
Thanks.
care. Bye
Bye.
bye.
Hi again. Thanks for watching. If you would like, share and subscribe to the channel, that would be amazing. And for more insights and information on mortgages and insurance, look out for our next video. Thanks.